Welcome to Rajvirao Accounts. Today let's discuss regarding subsidiary books. See, if all the transactions are recorded in the journal, okay, there is chance that the journal become too much bulky and it may not serve the purpose for which we are maintaining that particular journal. So particularly in a large organizations where large number of transactions will be taking place, okay, this journal has to be simplified so that the purpose of maintaining journal will be served. As such, to simplify this particular procedure, this journal is subdivided into these things there. In other words, for those transactions which will be taking place on a large scale, separate journals are being maintained, which are called as subsidiary books. Okay, so the subsidiary books are not separate books, they are part and parcel of journal only. So the subsidiary books observe here what he says, they are special journals meant for specific transactions of similar natures. In other words, to record special transactions of similar nature. Okay, specific books are being maintained here to record them. They are called as subsidiary books. So these following normally these following are the subsidiary books are being maintained in a business there. See, some subsidiary books relating to that of the cash which are being maintained are just like simple column cash book will call. Simple column cash book means here if this book is maintained in order to record only the cash transactions there which takes place in the business. This simple column cash book is also called as single column cash book. Similarly, this is double column cash book. Okay, double column cash book means cash book with the two columns you will be having, just like to record the cash and bank transactions, okay, with the cash and bank columns, or to record a discount and cash transactions, okay, or to record a discount and bank transactions. Like this, different types of two double column cash books will be maintained depending upon the requirement in the business there. Okay, then similarly, three column cash book. Three column cash book is nothing but this particular cash book is maintained in order to record the transactions relating to cash, bank, and a discount there. In other words, here transactions relating to cash, bank, and discount, they are recorded in this three column cash book. Three column cash book is also called as a triple column cash book. Similarly, petty cash book. This cash book is maintained in order to record the petty transactions which take place in the business. Petty transaction means small transactions which take place in the business are petty transactions. Okay, so this is about the cash book. Then coming to the next type of journals, they are called as goods journals. Okay, journals relating to that of the goods. In other words, to record the transactions relating to that of the goods, these special journals are maintained. Just like purchaser's book. This book is maintained in order to record only the credit purchase of goods. That means whatever goods are purchased on credit, to record them, this particular purchase book is being maintained. Then similarly, sales book. This is another subsidiary book which is being maintained. What for? To record credit sale of goods only. In other words, here, these particular subsidiary books are there only to record the transactions relating to that of the goods only. Observe here. So, to record a credit sale of goods, he says. In other words, whenever goods are sold on credit there, to record those transactions, the sales book is being maintained. In other words, in these particular books, we are not going to record any particular sale of any particular asset, nor purchase of any particular asset in purchase book. Okay, simply sale of goods that to do on credit are recorded in sales book, purchase of goods only on credit are recorded in purchase book. Then similarly, sales returns book. What for this particular book is being maintained? It is maintained in order to record returns of goods from the customers. Okay, to whom goods are sold. Okay, in other words, here earlier you have sold goods to your customers. Those customers, due to some reason, if they are returning it back to you, to record those particular returns. Okay, you are maintaining this particular book called as sales returns book. It is also called as return inwards book. Similarly, purchase returns book. What for this book is being maintained? In order to record the return of goods to those suppliers from whom goods were purchased on credit previously. That means previously you have purchased on credit from your suppliers. Due to some reason, now if you are returning them back to them, we will record here in purchase returns book. As such, here there are purchase returns book is also called as returns outward book. Similarly, bills journals. These are the journals relating to the bills. Okay, what are bills? Bills are those things on which some money has to be paid or to be received. So observe here, one is bills receivable book. This particular book is maintained in order to record the what we can say matters relating to the bills on which you are supposed to receive the money. Okay, they are called as to record bills receivables which you have drawn. Normally, you will be drawing the bills on the people who are supposed to pay money to you. Okay, at that time, on what date you have drawn, for how much money you have drawn, what is the period of that particular bill. Okay, to know the amount of that particular bill, to record all those particular things there, you will be maintaining this bills receivable book. Then again, this is bills payable book. Okay, this book is there. What for? You also might have accepted bills drawn on you by your particular creditors there. At that time, to have an account about the details about what bills which you have accepted and how much amounts are payable on various other due dates. Okay, this particular bills payable book you are maintaining it. Then the last one is called as journal proper. Okay, what is journal proper? See, among all these, this is the last one. Okay, in other words, here all those transactions which are not recorded in any of these particular earlier books there, you will be recording here in this journal proper. Okay, so this is nothing but the last one, journal proper. Now, what are recorded in journal proper? In journal proper, we will be recording opening entries. Okay, you are aware opening entries are entries written in the beginning of the year. What for? To bring about the closing balances of assets and liabilities of the previous year into the new set of books when you keep it in the current year there. Okay, so it is recorded at the beginning of the year. Opening entries. Opening entries are written in journal proper. Similarly, closing entries. Entries written at the end of the year when you are closing your books there. Okay, to record those, they will be the closing entries will be recording in journal proper only. Similarly, adjustment entries. Entries written in order to adjust some accounts there. Okay, adjustment entries. You are recording journal proper only. Similarly, rectification entries are there. Okay, rectification entries means here entries written in order to rectify the errors which are there in the books of accounts. You are writing rectification entries. So those rectification entries also you will be recording it here in this one. So simply we can say all those transactions which are not recorded in any of the earlier books there, they will be recorded here in journal proper. Okay, so these are the subsidiary books. Now let's take one after another these particular subsidiary books. Let's do some problems on that. So first I am taking up single column cash book, then again double column cash book. See, my board will not be sufficient, as such the problems I am keeping it in the description. Please go to the description, you will be getting that problem, and then before listening the lesson there, I want you people to go through that particular problem, make a note in one particular paper, or you can take one xerox of it so that you will be able to understand the problem which I am explaining to you. Okay, let's take the first problem. I am doing the problem for you people now. Observe here. See, enter the following in the single column cash book. First 2001 he said. So this is single column cash book we are telling it because we are having one column on the debit side to record the cash there here, and similarly on the credit side we are having one column to record the cash there. So this is the debit side, there is the credit side. See, this cash book normally is an asset account. As such, all asset accounts, as you are aware, these asset accounts are all real accounts. They will start with the two balance brought down. Opening balance will be on debit side normally. So cash, if you are having in the business there, opening balance it will be debit balance. If it is an overdraft, at that time the balance will be on credit side, because overdraft is the liability. It should show credit balance. So by balance brought down it will come. So normally here what is said, 2001 January 1. So the year you are writing 2001 here, as well as in the amount date column here 2001. So January 1. So on January 1, 2001 January 1, if you observe what is said, cash in hand. So this is the opening balance. So you will write it as to balance brought down. To balance brought down. Amount is 4,000. So write down 4,000. Then next, cash purchases is said. It is on January 6th. Okay. Every transaction, first of all, think about the entry for that. Cash purchases, what is the entry? Cash account data to. Your entry is cash account data to. I am writing it here for you. Cash account data to. Sorry. When you have purchased the goods there, your entry should be purchases account data to. Purchase account data to cash. Okay, because goods you are purchasing it, purchase is an expense, purchase account you are debiting, cash is going out, you are creating. See this entry, how we are going to post it, because this is one account there, cash account here. See, normally if this is an entry, in purchase account we should write it on debit side as a to cash. In cash account, credit side, by purchases we should write. So this is cash purchase, so it should come on the credit side. This is credit side, this is debit side. So on this side, on January 6th, it will be by purchases. Purchases account. Okay, by purchase. How much you have purchased? 2,000. So 2,000. So for every transaction, now we are going to visualize the entry and try to post it. Like that's how we should learn the subject. Then on 10th, wages paid. What is the entry for wages paid? For wages paid, your entry is you have paid wages. Wages is an expense. So wages account, nominal account, it will be debited. So wages account data to cash. Cash is going out. So on 10th date, so you write it as by wages account 40 rupees. Then again cash sales Observe on 11th cash sales is said. When it is cash sales, it means here you have sold goods on cash. Cash is coming in. So your entry is cash account debtor to sales. Sales is an income to you. Cash account debtor to sales. So in cash account debtor to sales. So it will be debited to sales account. So this is on 11th date. Cash sales. Okay, how much? 6,000. So 6,000. Then again, 12th date. Cash received from Suresh 1,980. Okay, and a discount allowed 20. Now observe here. Cash received from Suresh. When you have received cash from Suresh, your entry is cash account debtor to Suresh. 1,980 you have received. So cash account debtor to Suresh. To Suresh account. On 12th date, you have received cash from Suresh worth 1,980. Then what is said? Add discount allowed 20 on the same day. When you have allowed discount you have allowed means you have given discount, it is an expense to you. So your entry will be discount account debtor to Suresh. Discount account debtor to Suresh. That means in discount account you will debit. In Suresh account we should credit. Okay. So cash received from Suresh, your entry is cash account debtor. Discount account debtor to Suresh will come. So as such in cash account only to Suresh 1,980 whatever cash you have received that will be recorded here in this one single column cash book. Similarly, cash paid to Munna. When you have paid cash to Munna, cash is going out. You have paid to Munna. So your entry is Munna account debtor to cash. So it will be here on 19th. By Munna because cash is going out. Munna account. How much? 2,470. And discount received 30. When you have received discount from him, your entry will be discount is an income to you. You have received from Munna. So Munna account debtor to discount received account. It will be recorded in Munna's account as well as discount received account. It will not be recorded here in this one. Then cash paid to Radha. When you have paid cash to Radha, cash is going out. Okay. You have paid to Radha. Radha is a personal account, debit the receiver. So your entry will be Radha account debtor to cash. So it will be in cash in Radha account. You are going to debit. In cash account we should credit it. Okay. So you write by Radha. By Radha account. How much? 400. Then on 28th, purchase goods for cash. You have purchased goods for cash. When you have purchased for cash there, goods are coming in. You have purchased it, so purchase account will be debited. Cash is going out, so cash account being in an account, it is credit what goes out. So your entry will be purchase account debtor to cash account. So by purchase account you are right. By purchase account. How much? 2070. Okay. Now this is how we have posted all the transactions. Now how we are going to balance. Okay, this is the method in which you will be balancing any particular ledger account. Okay, simply what you are supposed to do here is leave some space here, leave some space here. How to balance an account, you are seeing it here only. Check it out, which total is more, debit side is more or credit side total is more. Which side is more, you check it. Okay, by seeing only you can see here we are having 4 plus 6, 6,000 plus 4,000, 10,000 plus 1,000, 11,980 we are having here. Whereas here how much you are having, you can check it. 0, 7 to the 14, 14 plus 4, 18, 1 carry means 8 plus 1, 9, 2 to 4, 6, 6,980 we are having on credit side, whereas on debit side we are having 11,980. So debit side is more. So that amount which is more among these two, you will be writing it in the amount column here. So how much it is? 11,980. Here also write down 11,980. So from 11,980, now you subtract these. How much are these? 8, 9, 6,980 is the total here. So that you are subtracting it here. You can see 0. 5,000 is the balance left over. So that 5,000 you will write it here. So this is by balance carried down. This is on the last day of this month, that is on January 31st, which will become in February, on February 1st it will become the opening balance. So it will be 2 balance brought down. Okay, how much? The same balance, 5,000 rupees. See, you can observe, doing this cash book is very simple here. In one way, you can remember that when cash is coming in, we are debiting it. When cash is going out, we are creating it here in the cash book, because it's the real account. Debit what comes in, credit what goes out. It is so simple. Okay, so this is how we are going to do the simple column cash book or single column cash book. Okay, I hope you people have understood this. Okay, problem, double column cash book or two column cash book. Third problem I am doing it. You can go through in the description. I have given the problem there. First problem I have done. Now the third problem I am doing it. See, prepare a two column cash book from the following. The year is 2020. So 2020 you have taken. Next, February 1, what is said? Cash in hand. I said cash account ordinarily, being an asset, it will start with the two balance brought down. Okay, it is an asset account. So this is debit balance. So on February 1, we are having two balance brought down. How much we are having? 4,000 we are having, 4,000. Then received cash from Madan. What we have received? Cash. So when we have received cash from Madan, the entry is cash account data to Madan. So in cash account debit side, you will write to Madan account. The date is 5th, February 5th. Amount is 2,200. Then again, 8th date, cash paid to Sohan. When you have paid cash to Sohan, your entry will be Sohan account data to cash. Cash is going out. So by Sohan we will get. This is February 8th date. By Sohan. By Sohan account. How much? 1,300. In cash column 1,300. Okay. Then again, paid to Raj. Okay. What is it in the bracket? Discount received rupees 10. How much you have paid? 290. So when you have paid to Raj, your entry will be Raj account data to cash account to discount received, because when we are paying to others, discount we will receive. Discount received is an income. So your entry will be Raj account data to cash to discount received. So cash is going out. So you are creating it here in cash account as by Sohan. Okay, both you are posting it here. Discount you have received 10 rupees, write it in the discount column. Then you have paid 290, write it in the amount column 290. Then 12th date, see, purchased goods from Ashok. When you have purchased goods from Ashok, your entry will be purchasers account data to Ashok. Purchasers account data to Ashok. Okay, rupees 500 is said. Purchased goods from Ashok, rupees 500 is said. What type of transaction it is? Now here we should check it out. Whether it is a cash transaction or a credit transaction. He said the amount of the goods is rupees 500. You have purchased it, but he has not said on cash there. The name of the party is given. As such, it is a credit purchase. So your entry will be purchasers account data to Ashok. It will be recorded in purchase account and in Ashok account, but not in the cash account. See, cash book itself is nothing but a cash account there. Next, paid to Manohar. Okay, what you have paid? 725 rupees you have paid. Discount 25 he said. You should understand, when you are paying the money to the others there, at that time discount we will receive. Okay. So paid to Manohar, you have paid 725 to Manohar. 25 rupees discount is allowed by Manohar to you. So from your point of view, it is discount received, which is an income to you. So your entry will be, you have paid to Manohar. Manohar is the person account debit the receiver. Manohar account data to cash is going out. So Manohar account data to cash to discount received. Discount received is an income to you, normal account. So it will be on credit side. By Manohar, you have paid it. So by Manohar. By Manohar account. Okay, how much you have paid? 725 you have paid. And discount you have received 25, write it in the discount column. Then cash sales. When you have sold on cash there, okay, cash account data to sales, cash is coming in, debit side, cash account you are going to debit it. Sales being an income, you are creating it being a nominal account. So cash account data to sales account, this is the entry here, you are going to post it on debit side. Okay, so how much? 500. Then again paid wages, 22nd date, paid wages. When you have paid wages, wages are expenses to you, your entry is wages account data to cash. So cash is going out. So by wages. by wages account. How much? 150. In that amount column 150. Then 23rd date you see. Paid to Ramesh 380. Who have paid? You have paid to Ramesh. When you have paid, cash is going out. So credit side. When you have paid to Ramesh, what is your entry? Ramesh account debtor. Because Ramesh is the receiver. Ramesh account debtor. To cash. Then again discount is said. There is a discount received by you. It is an income. So your entry is Ramesh account debtor to cash to discount received. So you write 23rd by Ramesh. You write, okay, Ramesh account discount received. Write it in the discount received column 20 rupees. And how much you have paid? 380 you have paid. This is how you are going to post it. Now balance this particular account, as I told you, leave some space here on debit side as well as here on credit side. Okay, even discount columns also you are supposed to total it, but you are not going to balance the discount columns. Simply you are going to total it. Here we are not having anything to dash, whereas here if you observe it is 555 is the total. Simply total it and leave it off. Discount allowed column, discount received column. Simply total it on either side. Don't balance it. But amount columns you are going to balance it. Check it out which side is more. Okay, on debit side if you observe you are having how much? 6,700 you are having on debit side. Okay, roughly you write down 6,700 on debit side here. 4, 5, 6, 6,700. Whereas here how much we are having? 5, 10, 19 plus 5 is 24. 2 carry 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 plus 8, 7 is 18. Carry 1, 2. 2,845 you are having on credit side. Once again you check it. 5, 9, 10, 19 plus 5 is 24. 2 carry 3, 4, 5, 6, 7, 8, 9, 10, 11 plus 7 is 18. 1 carry 2. Yes. On credit side you are having 2,845. Debit side you are having 6,700. So which is more? 6,700 is more. So write down 6,700 here on debit side as well as on credit side. 6,700. Now from the 6,700 you subtract this. So the total of this we have written here 2,845. So 6,700. From that if we subtract, how much we are going to get it? See, 10 minus 5 is 5, 9 minus 4 is 5. Whereas here 16, 16 minus 8 is 8. So here it will be 5, 5 minus 2 is 3. So 3,855. So 3,855. This is your balance carried down. So by balance carried down you will write. This is on the last day of the month. And in February we will be having 28 days. Okay. So which will become the opening balance in the month of, which month? In the month of after February, March. On March 1st. It will be 2 balance brought down. Okay, how much? 3,855. Here we are not going to write anything in the balances brought down. Okay, either on debit side or on credit side in case of discount columns. Simply discount columns you total it on either side there. See, there is no hard and fast to that. Every time we should get by balance carried down and 2 balance brought down only. Sometimes the difference may come here. Credit side being more there. At that time you write 2 balance carried down, which will become by balance brought down here. Okay, depending upon the problem that you are going to write it here. Okay, I hope you people have understood this particular one. So simply here in 2 column cash book there. On either side we are having 2 columns, one for discount, one for cash, one for discount, one for cash there. So this is discount allowed. Simply some of you students will get confused. Is this discount allowed or discount received? Simply think of, if you are receiving the cash, discount you will allow to the person who has given the cash to you. So discount allowed will come on debit side. If you have paid cash at that time, discount you will receive it. So this is discount received column. Okay. But in my opinion, every time when you are posting in an account there, imagine the journal entry. Okay. Visualize the journal entry. Okay. Then again try to post that entry in the account there. Okay. This will be the sound way to learn the subject there. Okay. I hope you have understood this problem. Please do subscribe my channel. Okay. And motivate me so that in the next topic I will be taking up 3 column cash book. We will be doing problem from 3 column cash book. Please do share, subscribe. Okay, thank you very much.